So we all know that AI stocks are the darling of Wall Street, and they are going to continue to be a massive sector. In this video, I'm going to talk about the fact that AI stocks are on fire, but I'm going to give you three of the best AI stock picks for 2026 for you to buy and hold. And one of them is a dark horse and stay to the end for that one. It's not one that you would expect. We're going to jump into this, and I'm going to reveal the three as we roll forward right now. So, like I said, we're going to talk about three AI stocks that are going to lead the NASDAQ to new highs. And we are positioning ourselves for a really good run between now and even rolling into the fourth quarter. But everybody's expecting the fourth quarter for stocks in general, and especially AI stocks, to really start to take off and boom, kind of in that end of third quarter, rolling into the fourth quarter scenario. Okay, so here are the three best AI stocks to buy right now. First one, you can't have a list without talking about Nvidia. Some people think that Nvidia is played out and that it doesn't have any room to move. And I actually beg to differ. It really does. So it is the face of AI investing since the trend kicked off in 2023. But Nvidia's chips have been the go-to GPUs, computing chips for nearly every AI business since their inception. Nvidia is the face of AI. It is the brand. Now, that doesn't mean that it's the only play you should be in, okay? There are absolutely other chip manufacturers. I've covered them on my channel, by the way. If you haven't already done so, hit that like and that subscribe. Definitely subscribe and hit that bell notification because I release videos every single day. There has been increased competition from AI chip designers like Broadcom and Amazon, okay? During its latest quarter, Nvidia announced 73% revenue growth. Considering that Nvidia is the world's largest company by market cap, that is incredible. Nvidia is the world's largest company by market cap. SpaceX will probably eclipse it as it comes out and does its thing, but that's a story for another video. It's about to get even better for Nvidia. Wall Street analysts project Nvidia's Q1 and Q2 revenue growth will be 79 and 85% respectively. If you do not own Nvidia, this is absolutely one of those stocks that you need to be in because it is, again, really the face of AI. It is definitely one of them. Now, there are different sectors of AIs. There's chips, there's memory, there's AI infrastructure, things of this nature, okay? Continuing on. At 24.2 times forward earnings, Nvidia stock is actually well below where it normally trades, and I don't think it's out of line to expect a rally by the end of 26, okay? And if we take a look real quickly at Nvidia's chart, we can look on the year to date, started off the year at 188, and currently trading today at 196. So essentially, look at it this way: you can really buy the stock today for what it was trading at on January 1. In the last month, it's up 11%. Last year, it's up 73%. It's trading at 24.2 times earnings. We saw that, right? Times forward earnings. So it's actually pretty well below what it normally trades. Okay, and there's been some massive growth. Obviously, 5-year 1,256 up percentages. Okay, so I think there's still absolutely room for Nvidia as we roll into the remainder of 2026. Broadcom is a competitor to Nvidia, but in a little bit different fashion. Okay, they're in the same space, but Broadcom partners with AI hyperscalers to design custom AI chips that provide superior performance at a lower price point, but at the cost of workload flexibility. Think of it this way: Broadcom's chips are very specifically targeted chips, whereas like Nvidia makes a GPU that is more of an all-around chip. But you get a performance boost by going with more of a chip like Broadcom makes, but it has a very thin line as far as what it can do. It's not an overall processing unit. It's definitely more for specific workloads, things of this nature. Okay, but it does have superior performance for specific types of AI-related computing, scenarios. During Q1 of its fiscal 26, ended February 1, Broadcom's AI semiconductor division, which includes other products outside of its custom AI chips, saw its revenue rise 106% to $8.4 billion. But get this: by the end of 27, the CEO believes its custom AI chip division will generate more than $100 billion in sales. That is more than a 10x from where it is right now. Okay. So yeah, so I think that there's some massive opportunity for Broadcom. If we take a look at Broadcom on the year to date, started trading at the beginning of this year at 346, and it's definitely up at 427. So on the 1 year, it's up 115%. On the 1 month, 36%. 5 year, 953. Definitely a little bit more as far as a percentage move up, gain or overall, say, versus Nvidia. So I definitely think that Broadcom should be in anybody's AI portfolio. Okay. The last one, the dark horse, the one I told you about, is Amazon. Now, don't tune me out because you need to know this. Amazon was the really first AI cloud computing company out there. And I don't know if you know how that played out. What Amazon was doing when they started AWS, which is their cloud computing division, they actually started selling their surplus computing power. That's how they got into that business. And it has since become one of the most profitable businesses in the Amazon portfolio of businesses. And now, obviously, it's a very, very big player in the AI space. Okay. So it has AWS, right? Its cloud computing division, generating most of its operating profits. But it's also attracting several clients, because of its custom chips, because of being a hyperscaler. Okay, so this part of AWS is experiencing triple-digit revenue growth, similar to Broadcom. Look, Amazon is sold out right here in the purple. Amazon is sold out of capacity for its third-generation Trainium 3 chips and nearly sold out of its Trainium 4 chips, even though that chip is more than 18 months away from launching. Amazon is a cloud computing powerhouse. We talked about that. But as the market will understand it more and start to understand that it is an AI hyperscaler as well with these generational chips, the Trainium 3, Trainium 4, they're going to start to understand how big of an AI player it really is. Okay. And I think that Amazon gets overlooked a lot as it kind of relates to being an AI specific company. Everybody thinks of Amazon, they think of books, and then ultimately the Amazon that we all know and use every single day in our life, right? But I think it's one that you should 100% think about. And so let's wrap up by looking at Amazon's chart. So on the year to date, started trading at 226 and currently trading at 273. So it's a $50 move up right there. Last month, we have $30, 30%. Apologies, it's been a long day. On the year, we're up 47%, 5-year. You can see that Amazon is definitely not being eyed in the view of an AI company and not being given essentially the respect from a percentage gain like we saw with Broadcom. Look at the 5-year on Broadcom, 953. Look at the 5-year on Nvidia. But this is because Amazon is not viewed as an AI company per se. It has an AI division, which is AWS. But I think that division is becoming bigger and bigger and more of an AI play. So Amazon gives you some good diversification, gives you some exposure to the AI space, but also it's Amazon, and there you go, right? So I think that Amazon is definitely the dark horse in this discussion. What do you think? Drop in the comments below. Love to hear from you. As always, thanks for giving me a few minutes. And on your way out, please hit that like, hit that subscribe. See you.